Hey everyone, Coach Investor here back with another FASTLY video for you today. So in today's video, we're going to talk about the earnings report. There's some super important details you need to know if you are invested in FASTLY or if you are wondering, should I open or should I close my position? We're also going to look at the graphs, my own opinion on the matter, what I just did. Obviously, if you clicked on this video, you know I bought some more FASTLY stock. So we're going to talk about all of that in this video. But before I do so, if you haven't subscribed yet, we're trying to reach 5,000 subscribers by the end of the month. So if you want to help me, hit that subscribe button. And if you like these videos, consider leaving an early thumbs up, as it really helps me out to grow the channel and get my videos out there. So without further ado, let's jump into the graphs. Alright, so as for FASTLY, the graph actually looks a bit terrible if you ask me. Obviously, we had a head and shoulder pattern, which did not happen because we had a major breakout all the way to new all-time highs at $130. Since then, obviously, reduced guidance in revenue, huge gap. We went all the way back to where we started before at those $70, $75 mark. Then earnings report right here. Today, the stock is down 5%. Under that $70 mark, I believed that that $70 mark would be a little support. Maybe we will close above that. I believe so. Would be great if we did. If we didn't, then maybe 65 should be a solid support, because as you can see right here, that was the last time we had a huge big candle upward. So in my opinion, should be a good support line. But overall, if you look at this, we can see that if it goes back, not even to the all-time highs of 136 intraday trading, well, 130, you make almost 80% on your investment, in my opinion. Like we've seen here at the RSI, the stock is pretty down and super low, almost oversold. So if you want to pick up right now under $70, in my opinion, you cannot go wrong. All right, so let's go and look at the earnings report, because there are some major key points we need to talk about, like TikTok leaving FASTLY, why they left, how this is going to impact FASTLY, etc. But there are also some huge positives in that earnings report as well. So let's go and look at that right now. All right, so the earnings report for FASTLY right here. Strong business fundamentals drive continued demand for FASTLY's platform. We can see here revenue growth 42%, even with that reduced guidance, which is pretty amazing. Which company can lose one of their biggest clients, if not their biggest clients, and still report 40% growth year over year? I don't think a lot of companies can do so. Total customer count increased to 2,047, up from 1,951 in Q2 2020. Total enterprise customers count of 313, up from 304 in Q2 2020. So again, they've been increasing their customer base even more than they have before. This point right here is a pretty big one, which is dollar-based net expansion rate of 147%, up from 137% Q2 2020. Another important point right here, average enterprise customer spent of approximately $753,000, up from $716,000 in Q2. Again, we want to see that those huge clients spent more and more. It's nice to have lots of new clients, but you want those big ones to spend more money. That would mean that revenue rises again, gross margin, profit margins, etc. As we can see here, GAAP gross margin of 58.5%, up from 55.2% in Q3 2019. Non-GAAP gross margin, which excludes stock-based compensation, of 59.8%, up from 56.1% in Q3 2019. And lastly, in that little highlight summary right here, enterprise customers generated 88% of our trailing 12-month total revenue, consistent with Q2 2020. So again, they keep that consistency right at the top, even if they have some geopolitical issues, losing some big customers, etc., which we're going to discuss right now. So this is the CEO, Joshua Bixby, and he talks about that TikTok issue that we've been talking about in the last couple of videos. So basically it says here, regulatory uncertainty, our previously disclosed largest customers, which account for 10.8% of our revenue for the 9 months ended on September 30th, 2020, removed a majority of their US and non-US traffic from our platform by the end of the quarter. Based on publicly available information, we believe this global traffic reduction was in response to the potential of a prohibition of US companies being able to work with this customer. Obviously, we all know this is TikTok. He goes on by saying that this clearly impacted Q3, and based on the continued turbulence of the situation, we anticipate the traffic reduction to continue into Q4 as reflected in our guidance. They have reduced guidance also for Q4. Now he does leave the door open for TikTok to return. We are prepared to accept additional traffic from this customer if conditions enable it to return. However, if it becomes clear that we should no longer support this customer, we believe the reserve capacity for this customer can be relocated over the medium and long term with a traffic mix that is consistent with our gross margins objectives. Now, the second part of that reduced guidance for Q3 and Q4 is because of the existing customer timing. In the latter part of Q3, our forecast for the timing of new traffic coming onto our network from a few existing customers did not meet our expectations. A majority of these timing issues have been resolved, and we have now seen this traffic come into the network. Aside from these few customers, the business performed as we had forecasted. In addition to these two factors, our Q4 guidance now includes the revenue contribution from Signal Sciences. Looking ahead, we remain confident in FASTLY's future, both in the short term and the long term, while also accounting for the unique uncertainties we face in supporting our largest customer. Now, regarding Signal Sciences, we can see right here, they have two new elements that are going to be implemented in FASTLY's ecosystem. One is Compute Edge and the other is Signal Sciences. Signal Sciences is basically security for all web applications, and Compute Edge, well, basically tells you what it is, computing at the edge of the cloud. Both of them will be implemented in the FASTLY ecosystem and network, which would help those huge clients get their content even faster and more secured. And to end this little earnings report, we see here a quote by the CEO. Under cover, we have an incredibly strong and resilient company. I have never been more optimistic about our company than I am now. So if you ask me, yes, numbers are not great, let's say, but people are over-exaggerating what is going on right now. A company that is still growing at a 40% year-over-year growth, even if they are losing their biggest clients. For me, it is amazing, and that's why I have opened a position. All right, so to simplify what we've just seen, if you skipped that part, basically FASTLY still growing pretty well, even if their biggest client has ditched them because of geopolitical reasons, not because the platform isn't good, it's because they had to leave FASTLY. Because I've seen a couple of people, oh, TikTok left FASTLY so easily and replaced them. Why isn't it stopping other people to doing the same? Well, they didn't want to leave FASTLY. They were forced to leave FASTLY because of those geopolitical reasons. So TikTok, yes, they're not FASTLY's customers anymore, but like we've seen, they could be coming back if obviously those political reasons disappear. But all in all, again, there are more customers using FASTLY right now than there were before. More revenue, more growth. So all in all, I'm pretty positive. The stock is down immensely since its all-time highs. Obviously, this all-time high was very, very short, but I expect this stock to go well over $100 in the short term and especially in the longer term. And that will be it for this video. If you liked it, consider leaving a thumbs up. And if you haven't subscribed to this channel, hit that subscribe button right here. Help me reach 5,000 subscribers by the end of the month. Will be greatly appreciated. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.